Today the topic is when markets fail. And it's a great pleasure to introduce Nanno Kleiterp as the first speaker. He is the CEO of FMO, the Dutch Development Bank. He has very good knowledge of the world, but in particular of Latin America, where he has intimate knowledge because he worked there for 10 years, amongst others in his role for FMO, but also for the Nicaragua Development Bank. Nanno, the floor is yours.
Well, Sweden arrived, so everybody's very happy, Sweden, that you're here. Good morning to everybody. There are not many conferences that have, as one of the speakers that start, invite a banker today. So that is quite special for me. To be here, but that's because I think two things, at least. FMO is a very special bank, a development bank, and I will show you that the way we behave is quite different from a lot of other banks. So I think that justifies to speak here. And the second one is I'm not an expert in health, absolutely not, but I am involved in health, and I'm the vice chairman of the supervisory board of the Royal Tuberculosis Foundation, who's working worldwide on identifying, curing tuberculosis, a very needed thing, as Joep showed already. Let me see how this works. Yes. I would like just very shortly to say something about investment in health, to tell you a little bit about FMO, and then the DFI stands for Development Financial Institutions. Those are institutions who focus on the private sector. And then one of the projects which we have been financing together with Farm Access, and some concluding remarks. First, of course, a basic necessity is healthcare, and it is also an investment opportunity. And why is it so important to invest in healthcare? It seems quite logic, but also I agree there with Joep on the WRR report. Of course, investing in health has a huge effect on economic growth. There's a direct relationship. If healthcare is better, economic growth, GDP is higher. Well, that's going two ways, but at least it's of course very important. And we see, of course, an increasing demand for healthcare. We see, especially in Africa, where there are a lot of diseases and where we need more supply in healthcare. And at the same time, what we see is that governments are not able to fulfill this supply, and is not capable of meeting the basic health needs. And that private sector, and that's where FMO stands for the private sector development, is crucial also in healthcare. And maybe that's, looking from the Dutch perspective, special, because our healthcare, of course, is mostly public, and the public involvement is very high, but we see a huge need for private sector becoming involved in healthcare. It is already involved. Well, the need, I think some of the pictures that you've already showed, of course, in Africa, sub-Saharan Africa, a huge global disease burden. 24% of the global diseases are in Africa. There's less than 1% of the global health expenditure is in Africa. And at the same time, we see that 60% of the total health expenditure is financed by out-of-pocket payments by primarily the poor. A lack of infrastructure and facilities, very restricted financial resources, public and private, and a skills deficiency. But it is at the same time, of course then, an investment opportunity. There's a need, calculation from World Bank IFC, to invest in the coming years 35 billion of new investments, and the expectation is that most of those investments have to come from the private sector. And I will come back to the health fund later, but it's a very good example of private sector involvement and in achieving healthcare goals. In order that you understand a little bit what FMO does in relation to the topic, but also in general, we are not specialized in healthcare. But FMO, we call ourselves the Entrepreneur Development Bank. FMO is a public-private partnership, 51% owned by the Dutch government and 49% by Dutch banks and companies. We operate like a bank. We have a AAA rating, and we focus on 4 sectors: financial sector, energy, housing, and agri-food. Health is not there, and I will come back to that later, why that is. But one of the reasons, of course, is that there are still a very small number of private healthcare projects which are bankable. And we provide finance, risk capital, different products. To give you an idea of the size of FMO today, our total portfolio, asset portfolio, is 5.3 billion. And new commitment, yearly new commitments are between 1 billion and 1.2 billion. What is special about FMO is that there are 3 characteristics where we differentiate ourselves from most banks. The first one is that we are additional, so we take risks that other banks do not take, that commercial parties do not take, so that's the reason of our being. We try to catalyze as much as possible commercial parties who want to come along with us because of our involvement in projects. And everything we look at what is the impact of our project, of the companies we finance in the environment, on social aspects, on employees, and the governance of the companies we finance. We would like to see them to have the best practices in governance, because that is also one of the issues which have a huge impact on the success of projects. And then we manage for the Dutch government several funds, a financial sector fund, an infrastructure fund, and these funds can even take higher risk than we are able to do on our balance sheet. To give you an idea, so 50% of what we do is risk capital, 50% is loans. By sector, you see that the financial sector is very important. Why is the financial sector very important? Through the financial sector, we can reach small and medium enterprises, and we build up and we strengthen the local financial sector. Region Africa is the biggest region, a huge need there, and we focus almost a little bit less than 50% of our activities are in low-income countries. So that gives you a little bit of a picture of what FMO does, and in relationship what I will say furthermore. So what can be the role of development finance institutions in healthcare? But first, to give you a picture where you have 3 pillars of development finance. The first one, the most traditional one, is aid. Grants to mostly public institutions, to governments, for humanitarian and development assistance. That's about worldwide 100 billion aid per year to governments. Then we have the development banks, the multilateral development banks. The multilateral development banks provide loans, also grants and guarantees, also mostly to the public sector, and are large-scale interventions. That's also about between 50 and 100 billion. So that's the World Bank, the Asian Development Bank, the African Development Bank. And then the third pillar, which has been growing over the last years quite fast, is the private sector. Now, private sector is now worldwide much more recognized as an important player in development, and that private sector is fundamental to create development. Because without private sector, we don't create jobs, we don't create the services. No, governments have limited capabilities of doing that, and the estimation is that's about 14 billion. Well, FMO fits within that third pillar, and we provide risk capital and only to private sector companies. Then the role of development finance institution is to provide access to capital, but also knowledge. Knowledge in the sense of consultancies, but also knowledge on financing and structuring finance, making projects bankable, because we see a lot of activity, but it's difficult to make things bankable, and to catalyze as much as possible the commercial sector to high-risk areas, to high-risk companies. By our interventions, what we want to demonstrate, and that's also very much so in the healthcare, is the viability of private solutions. So show to other investors that it can be done and that risks can be manageable. And as I mentioned, we try to support our clients in bringing best practices on environmental, social management and governance. And we provide them with the networks worldwide, of course, because we operate worldwide, so that worldwide networks to learn from each other. Then in the health sector, there's special challenges for development finance institutions. And the first one is that on a scale there's very limited private sector initiatives. Government is, let's say, dominant in the sector, and should be dominant in the sector, of course, in regulation. But in execution, what we see is that there's a lot of private sector initiatives, but very small, mostly very small. It's, at the same time, it's a very politically sensitive sector, where there's a lot of discussion, as we have also in the Netherlands, of course, private sector getting involved, making profit at the cost of sick people, is sometimes the discussions you get when a private sector gets involved. In most countries, especially in Africa, of course, the market is not very regulated, which makes it also more difficult for private players to operate, and it creates more uncertainties. Returns are lower than in most other sectors. And we have been involved in hospitals and clinics, but then it's very difficult in the private sector to get, let's say, the good balance that private services are available and accessible for also low-income groups. As I mentioned, it's already it's difficult to make those initiatives bankable, and because development finance institutions in general, it's a small part of their portfolio. There's also, it's a little bit chicken and egg, but there's also limited knowledge on the health sector. Also, this afternoon you will get more in detail the explanations on the investment fund for health in Africa, which is a great initiative, of course, together with the MCF, interventions in the private sector, created by Farm Access, by Onno and Joep and his team. And several years ago, they approached FMO if we would be interested to invest in this fund, a private equity fund, healthcare-related services investments, Africa-wide, and today the fund is 50 million euro. For us, that was a very challenging proposal. We have been involved in some hospital financing, but we haven't been very much involved. Well, in that sense, the concept was not tested, so you don't know really. It's really a greenfield, a startup. There was still, at the beginning, high cost and uncertain revenue streams to be expected, a low return, and in the team, let's say, was very specialized in a lot of experience in the health sector, but not a lot of experience because in the private equity sector, because there are no other private equity experiences in Africa in the health sector. We were able to do this, and because this, for us, it was really a high risk investment. We were also able to do it because we have this special funds from the government to take higher risks. So finally, the contribution of FMO was 10 million euros. We started 49% of total equity. That is really quite exceptional for us to do it, to get, let's say, one of the biggest shareholders, or the biggest shareholders in this case. There was also management training very much for the companies we invest in was necessary. And personally, FMO personnel got involved in the credit committee of the fund. And let's say all the work that has been done, but I think also the involvement of FMO made the second close possible and we got other investors in, and finally the fund today is 50 million, and investing those funds. So it is a difficult environment to fund and to find financing. And I think if the whole debate on development cooperation and aid, we think we can use ODA money, so official development aid money, much better than it is used today. And it is not only giving grants, of course grants still have to be part of it, but let's say do more with less, because we see also in Holland there will be reductions on the development aid budget. I think that worldwide that will be the case with the crisis we are living in the West, in Europe and the United States. So we have to do more with less. And it can be done if you invest instead of give the money away. I think solutions there where we have to think more about and how to implement them, especially in Africa, because it is a lot of SME health services, which we're talking about. Local banks should play a bigger role in financing those smaller SME health services locally. Second, what we need is risk capital. So IFA is a very important example, but of course you need more supply of risk capital, so private equity funds. And then from the government part, we need to think more about innovative finance, in the sense of how do you leverage, how do you use your money in the government to take away some risk for the private sector, which makes it possible for the private sector to invest. So creating funds where you have a first loss, so not give away the money, but let's say a kind of insurance within financial structures which help with, let's say, a relative small amount of aid money, invest that, take the highest risk, and catalyze other investors. In health, it's very important to finance in local currency, because all the costs, of course, are local currency. Everybody is a local currency earner, but still we see health projects also financed in hard currency, and that doesn't work. Another one is we start a lot of these projects of companies by providing grants. What FMO has been doing is saying, okay, let's see if we provide you with a grant. If the project is successful, then that converts in equity. That means it creates a return, the money comes back, and you can invest it again in other projects. So a much more efficient use of scarce donor money. And that's what I mean with the last one. In that way, you leverage structures. So there's a lot of, let's say, there's what we can be one in looking at these structures and using efficiently government money for to catalyze the private sector. In conclusion, we see an increasing need for healthcare services. We see that the private sector is needed much more, and we need more bankable projects which also address low-income groups, and innovative finance is an important part how to use government money better than we do today. Thank you very much.
Yeah, you can tell some introductory jokes.
There is still time for a number of questions, so I think there's two ladies in the middle holding a microphone. If anybody has a question for Nanno, we can still take that prior to Zweder starting with his speech. Anybody? Yes, they're in the middle.
Hi, thank you for an interesting talk. I was wondering whether, when considering bankable projects, whether there's some space or for consideration for codes of conduct or ethical principles that the companies that you invest in would need to adhere to.
Yeah, I think. Yes, well, in general, what we assess the companies where we invest in on their conduct in the due diligence we do on the environmental, but also that's part of the social conduct. So we look very much the accessibility and, of course, the quality of the services. There's not an official code of conduct, but I suppose once we get more of these projects that it would also be interesting to develop an official code of conduct for these companies in order to have a quality standard.
Other questions? Yeah.
I wonder, you said at the moment this is not an area of focus for FMO because there's simply a lack of scale, lack of addressable projects. Is it something that you're looking into and devoting resources to, or is this sort of a one-off, a great opportunity came up, you liked it, but it's more sort of passive? If a great project comes, we'll look at it, but we don't devote resources to developing other ones.
Well, we are quite opportunistic in that sense. We have really built up a focus in four sectors: no, the financial sector, energy, housing, and agri-food. We are a relatively small institution, so that's what we really focus on. But of course, looking at the long run, you still expect to see more private sector initiatives there. But today, it is for us too small to really build up knowledge. I think others, especially World Bank, IFC has more knowledge. We work together with other banks in that area, so we will build more on knowledge of others. But as it is an important sector, let's say, as I say, in an opportunistic way, we will look at it. But it won't be, let's say, in the next few years, a focus of FMO, especially because of the size. But we see it is an important sectors where we also want to be active.
More? Yes, there is.
Thank you also for your talk. You said there are limited private sector initiatives that are bankable, but we know that in healthcare there are a lot of NGOs active. Does FMO consider partnering with NGO initiatives and making them bankable?
Yes, of course, we would like to partner with NGO initiatives which are bankable, or when they approach us, we can help them to make them bankable. But even those initiatives mostly are quite small scale, most of them. So it still is a sector which where there are limited opportunities to invest, and which the structures are, and let's say the financial structures are structured in a way that it is probable that you get your money back.
Thank you very much for the excellent presentation. Could you just unbundle a little bit more what from the banking side you see as this high perception of high risk in the health sector? Some of the work that we've done in market studies in Africa show clearly that although the health sector lending portfolio of local banks is less than 0.5%, when you go deeper down and find where they have lent their money, the repayment rates and the default rates are lowest for the health sector. So although they are perceived to be high risk, when they borrow, they pay back very well. And I thought that's an important thing for any bank. So how do we unbundle this risk issue?
Well, as you say, it's quite a small percentage of banking portfolios. So banks are selective, so and helping those with the highest probability of being successful. I think especially what is our experience is once you you want to scale up smaller initiative, or we have been involved in Bangladesh, but also in several other countries and in Africa in setting up hospitals. And there the problem is the entrepreneurship, being capable of managing a bigger healthcare service provider. And that's really where the high risk is. It's in the implementation of a good service provider. That's one, of course, and the other one is, I think, where Farm Access has done a lot of study, is the combination that you need good insurance companies in order that people can pay for the health services. that are provided on a good quality basis.
Is FMO Bank focusing also at cooperation with commercial banks? I understand, well, commercial banks have foundations or corporate social responsibility programs. Is there some space, some room for cooperation and providing good examples?
Yes, we would like to, but we haven't been approached a lot by commercial banks to do so. Of course, in IFHA, some commercial banks are involved, but I think managing money not from themselves, but from interested investors in that sector. So we don't see also from the foundations of banks a lot of involvement in the healthcare sector.
Yes. Thank you very much for the very interesting presentation. My question is, one of the sectors that FMO prioritizes is financial sector development. Today we'll be talking a lot about also on the insurance side, which is indeed financial sector development. Would there be a possibility of linking that more closely?
Yes, we are involved in not very many, but in Africa, in Nigeria, and also in insurance, in an insurance company, also in health, which provides also health insurance. Yes, I think that's also what I think you won an award with Joep on the article on healthcare and how important risk pooling, so insurance is. So within our financial sector approach, that's what I mentioned. We could provide credit lines for banks, let's say, to support SMEs, the private equity part, and the insurance companies. But also there's a lot of government involvement and relatively, especially for low income, which maybe have to be subsidized for the first period of time. There's not very much initiative on a big scale in the private sector.